Good evening, everyone. I am CA Yash Kunawat, moderator of this webinar. We are delighted to welcome you all in the webinar being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be a moderator for the 59th webinar on reporting under clauses of Form 3CD and recent changes in GSTR-9 and 9C. In a short while, we will start the webinar. First, I would like to apprise you about the CPE committee. In today's ever-changing professional scenario worldwide, the biggest challenge the professionals face is how to stay on the top of the game while adapting to new requirements and norms. Therefore, it is imperative to aim to be up to date, to offer unique guidance, influence others with the innovative approach and expertise. It is also vital to stretch old ideas beyond traditional boundaries to create new perspectives. In this context, continuing professional education facilitates professionals to maintain, improve, and broaden their knowledge, skills, and expertise required to achieve their professional goals through webinars, seminars, etc. The program for this evening is as follows. We have two sessions of 1 hour each, and topics are reporting under important clauses of Form number 3CD and recent changes in GSTR 9 and 9C to be filed for the financial year 24-25. Our eminent speakers, CA Manoj Gupta sir and CA Saurabh Nagda sir, will talk about above mentioned two emerging areas of professional interest. Without taking much time, I would like to introduce CA Manoj Gupta sir. He is presently serving as a special invitee to the Direct Taxes Committee of ICAI, a passionate reader and writer. He has authored numerous articles on direct taxes and GST. Since 1996, he has been consistently analyzing and commenting on every finance bill up to the recently enacted Finance Act 2025. An eminent speaker on various forums, he regularly delivers lectures on income tax and related subjects. He has also authored several acclaimed books, including Direct Taxes Ready Reckoner, 1st to 26th edition, Handling Tax Audit, Capital Gains Taxation, Income Tax Practice, Handling Notices under Income Tax, Tax Planning Ideas, etc. Without taking much time, I would just like to mention that currently more than 200 participants have joined this webinar. Let me welcome CA Manoj Gupta sir for his deliberation. Please, sir.
Thank you, Yashji. The CP Committee of ICAI Chairman Satish Gupta sir अभी present नहीं है मुझे बताया. I am told that he will be joining soon. My co-speaker C. Saurabh Nagda from Udaipur, moderator C. Yash Kunawat from Udaipur again, and all the members of the technical team and all the esteemed members who have joined this webinar in this busy season of tax audits. We have just left 2 days more to file our tax audits. Thereafter, nothing is going to happen. Don't worry. It's not easy to levy penalty. For penalty, there shall be a show cause notice. So if you fail to upload any report, don't be in panic. Upload it before 30th November and there will be no issues. And if issues any there will be taken care of at the appellate level. So don't panic, don't ruin your health, but play with your health for the client. That's all my starting. Now we come to the topic of the today, reporting under various clauses. I share the screen first. This is my presentation, which carries entire tax audit aspect, but we will take only the reporting under important clauses because of the paucity of the time. So we start. That thing I would like to repeat again. Many people think that AS has no application in tax audit, but AS has application because you are doing the financial audit also, for regular audit also, while signing the balance sheet and all that. So we have to be very careful that AS has to be followed. All auditing standards have to be followed while discharging our test function. It's not simple a filling up of Form 3CD. The other people who have tried to enter the space have represented before CBDT that it is only filling up of form number 3GT. Even filling up of form number 3GT requires a thorough understanding of the income tax law. It is not simple that something is given in the books of accounts and you have to simply report that. So this is, there are in total 41 clauses, out of which some clauses require only factual information and some clauses requires legal legal nature. You have to determine the amount and mention it like AO. So start with clause 8. The queries which are generally generating in the market is that in case of a company, which clause to select? In the case of a company or LLP, where audit is required as per the law of LLP law or company law, you will always select 44AB third proviso. In the case of LLP, there are certain situations where audit is not required under that law. But if turnover is more than liable to tax audit, then it is required there also. But sometimes it may happen. But in that case, you will select 44AB clause as per your understanding, as per your requirement. Clause 8A requires whether SSC is going for new tax regime or old tax regime. We have to take a declaration whether the SSC is wanting to opt for the new tax regime or old tax regime. If he is going for new tax regime, then clause 33 will become redundant, deduction under chapter 6A, and many other clauses will be affected that we will discuss. Another query that generates is the books of accounts. In the case of a company or LLP, there are certain set of books of accounts to be maintained as per that law, company law or LLP law. So it is not to be confused here, because in the income tax law, books are prescribed only for the specified professions. Specified professions are legal, architecture, engineering, accountancy, like that. Rule 6F provides the specified professions. In the case of specified professions, books are prescribed which books are to be maintained. In the case of business and simple professions which are not a specified profession, not covered by section 44 ADA, there is no books prescribed. So whether books of account has been prescribed, in the case of business, you will always state no. A list of books of accounts maintained. Here you will write that books you have examined, books maintained, and if books are maintained on a software like Tally, then you have to mention all the books generated by the Tally, because Tally generates purchase register, general register, sales register, apart from the ledger and cash book and bank book. So we have to mention that we have examined ledger, you have always examined, cash book you always examine. You have to mention that all other books generated by the system is the list of books of accounts maintained. And what you examine is the cash book, ledger, bank statements, vouchers, GST returns. If you have access to GST portal, then GST returns, that you will mention in clause number 11C. Method of accounting can be either mercantile or cash. So we have to mention that only. Clause 14, valuation of stock. Valuation of stock is a very important area. Generally, in audit reports, we see people write in the P&L itself, stock, bracket mein, the stock has been taken, certified, valued by the management. This is not the discharge of your responsibility. This is not the discharge of your liabilities as an auditor. You have to determine the arrive at the stock value. For that, you have to ask the SSC list of prescribed item, list of principal items traded, opening stock, purchases, sales, and closing stock. How the value is arrived at. You have to see the last bills to find that FIFO method is followed or LIFO method is followed, whatever SSC follows. And if these details are not available, then you have to qualify the report that stock is taken as a figure given by the management, but there are no papers provided, no stock register maintained, no quantitative details provided. So you have to be very careful. Simply writing that management has taken the stock, I have no responsibility, is not the correct way of reporting. You have to report whether there is possibility of stock valuation or whether there is not possibility of stock valuation. In para 5 of 3CB, you will mention valuation of stock is not possible. There is a drop down menu, and in that you will mention all these details. Because the SSC has not maintained the data, we cannot certify the figure of stock in class 14. And in main report 3CB, para number 3, you will qualify that stock details are not provided, so we are unable to value the stock. That will discharge you as a duty, and stock is arriving in the P&L as taken by the management. We have nothing to verify. We were given no material to verify, and we cannot verify. Conversion of any capital asset into stock and trade. You have to mention capital asset, which capital asset was converted into stock and trade. Date of acquisition, you have to find out from the papers, from the data provided by the SSE, that when the asset was acquired. Cost of acquisition, it's a very, very important area. You have to find it out. What is the cost of acquisition from papers submitted by the SSE? If it is not ascertainable, then you have to qualify the report or amount at which it is converted. It is to be mentioned. It will be relevant for section 45, subsection 2 later on. Number 2, once the capital asset is converted to stock and trade, it has to be carried in the books at a lower of cost or net realizable value. So if the SSE mentioned that amount in P&L account or fair value, you have to again qualify the report that stock is not being carried at lower of cost or net realizable value. So it is very important aspect of this type of cases. So we have to be very careful while reporting under these clauses. If the SSC converts any capital asset, there are issues with regard to the rural agricultural land. In one or two tribunal judgments, that rural agricultural was taken as capital asset, and that was hit by section 56. Otherwise, generally in all other judgments, the ITAT has taken a view that rural agriculture asset, the land is not a capital asset. So you have to take a call accordingly. And if rural agriculture land is converted into stock and trade by the SSC, like dealing in lands or etc., then you have to mention that I have not reported this amount, this item in clause 15, because as per tribunal judgments, there is a issue that is rural agriculture land is not a capital asset. You have to mention in para 5 very clearly this qualification, so as to record your view of what is the uh, basis for not reporting. Cost of acquisition, which you need to mention, is the actual cost of acquisition, not the fair value as one for 2001. If the asset has been acquired prior to that, that is the option given to SSE to substitute at the time of transfer of the asset. Otherwise, cost is the actual cost incurred by the SSE or any previous owner. Some question was there last 2 3 days back that the SSE has not acquired his, he has inherited. Then from whom he has inherited, he would have acquired. That would be the cost of acquisition of the SSE. And if the year in which asset was acquired books were not audited, then auditor to ascertain cost with reference to the material provided by the SSE, and you have to mention in the report that we have arrived at the valuation as per the data provided by the SSE. Incomes falling under section 28, clause 16. Here, in clause 16A, we are asking for section 28 incomes. Here, 2 points only we will discuss. One is that suppose you are auditing books of a partner of a partnership firm, and the partner has got some non-compete fees from the partnership firm. The partner tends to show that amount not as taxable, but that is taxable. 28 VA section is there. So if this is the case, then you have to report it here. Second is 28 fourth. 28 fourth is a benefit of perquisite arising out of business, whether convertible into money or not, whether in cash or partly in kind or otherwise. This is the current clause 28 fourth. The problem is with regard to the loans. In the case of business loans like cash credits, the settled legal position, roller tenors, or compact electronics cases is that if there is a waiver, then it is income, 28.4. But for capital account loan, there was a judgment of Supreme Court Mahindra and Mahindra, and we were taking shelter of that judgment. And in that judgment, it was clearly written that such loans waiver are not taxable because they are not covered by Section 28.4. The Finance Act 2023 amended Section 28.4, and now such loans are also covered. So if there is a waiver of any loan on capital account, you have to mention that amount here also. Third is important, like the dealers or some doctors or on achieving certain targets, they get certain benefits. That benefit is taxable here. If the SSA has converted any inventory into capital asset, that inventory has to be valued as per Rule 11 UAB. So we have to check it also. And last is scheme and insurance policy. Generally, SSE treats its insurance money is exempt under Section 1010D, but scheme and insurance policy receipts are chargeable to tax and has to be reported here if not credited to P&L account. Any other income? There was a confusion. Some auditors in the 2-3 years back reported interest income, PPF interest here, clause 16D. But Allahabad bench of ITAT has clearly held that here only the income related to business which has not been credited to P&L account will be reported, and if auditor makes a mistake in reporting, then that reporting will have no legs to stand. In the case of PFESI, the employee's share is first income of the employer, and once he remits that amount by the due date mentioned in section 36(1) VA, that is 15th of next month, then it is deductible. So first it is income, then it is deductible. So if there is a delay, suppose you remit it on 16th or 17th or 18th, then it is your income. So if you report it here, then two time addition will be there. One time addition will be in clause 16D and another 20B because of the date mentioned there. So you can mention the report that this is the amount which we have not reported for the simple reason that that amount will be 2 times added by the CPC. Else you can mention it here, and in the ITR form there is a column any other deduction. So you can again report that amount there. that will be deducted and one-time addition will be there. Similarly, in clause 17, dealer of immovable property is transferred at the price of lower than value adopted and 110% concession के बाद whatever amount is there, that calculation has to be mentioned and it mentioned here. Capital receipts are charged; those are chargeable to tax has to be mentioned. Subsidy receipts very important. Nowadays, people are getting subsidies for establishing factories or all that. Section 224 has been amended by the Finance Act 16, I think, if I remember correctly. And all subsidy receipts has been made taxable other than two subsidies. One subsidy that is going to reduce the actual cost of the asset, and another is a grant given by the government to any charitable trust. Otherwise, all subsidies are now taxable, whether it is GST subsidy, interest rate subsidy, lease rent subsidy, whatever it is there. So you have to be taking SSC, if not credits this subsidy receipts to P&L account, you have to mention it here. Clause 17, you have to report property-wise details and stamp value. If there is a transaction value is less than 7, then only reporting will be made. Otherwise, there will be no reporting in the case of any SSE. Clause 18, there is not much to discuss. Clause 19, they have added one new thing in the end, that any other relevant section. There are different views on it. My view is that section 30, 31, 36 are covered by that any other relevant section. You have to check whether these deductions are allowable or not allowable, and you have to mention the amount debited and amount allowable. That is my view. You can take your own view and report accordingly. Clause 20, you have to mention only PF and ESI. NPS contributions are not to be mentioned. And sometimes we receive queries, very hilarious queries. Sir, can we shift the due date? The due date is 15th. The CA asking me, sir, can we change the due date, suppose 20, so that my SSC does not get the addition? SSC, you need not save SSC to this extent that you will be in trouble someday. You mention the 15th. If there is a date extension that this year, the date has been extended to 22 October 2025, take that copy of that circular with you and then mention that date accordingly at the time of next tax audit. And you have to mention only here on here also. Generally, what happens is the entire amount is reported. Only the amount received from the employee. Employer contribution need not be reported here. That will be going clause 26. Contribution to political party, if any contribution is made, then you have to report here the amount. You need not worry about the allowability or otherwise of the amount. You have to mention the amount only, that contribution only. And if donation is made for which deduction is allowable under section 80 GGP or 80 GGC, then that amount is not to be mentioned here. Personal expenditure, you have to take the certificate and scrutinize the book. Sometimes home electricity bill and home water bills are also paid from the office. So in that case, you have to mention that amount here. Expenditure at clubs is very important. So you have to ascertain whether any expenditure at clubs has been made, and that has to be reported as per the format given in the clause itself. The point is, if proprietor is there, then you have to check whether the amount of expenditure is for the business or for pleasure. If it is for business, then it is allowable. If it for pleasure, then it is not allowable. But we have to mention the amount. If any expenditure at clubs has been incurred, we have to mention the amount. The assessing officer will judge whether it is for pleasure or for business. In the case of employees, sometimes the company put club expenditure, etc. company bears. So the purpose of inquiry is to find out the value of perquisite in the case of those employees. So you have to mention the amount incurred, not the whether the it is personal or allowable or not allowable. Penalty or fine, very important area. Late fees is always allowable. Any penalty where show cause notice is issued is never allowable. Interest on GST is allowable. Interest on TDS, there are divergent views. In Narayani Ispat Private Limited, Kolkata bench has held it is allowable, but in Velankani Information Systems, Iris Associates, Hari Machines, Delhi Tribunal and Bangalore bench of ITAT has held it is not allowable. In Velankani Information Systems, the ITAT Bangalore bench has analyzed the entire scenario in the light of CIT versus Chennai Properties Madras High Court decision, and they arrived at the conclusion that interest on delayed remittance of TDS is a personal liability and is not allowable because it is related to tax. But the other view is also there. So you have to go by the view you take and mention it in your reports. Expenditure to settle proceedings, the notification of this that which expenditure settle proceedings will not be allowed has been issued in the April month of this year. So last year any expenditure has been incurred need not be mentioned here because last year SSC was not aware which expenditure will be government allowing or which expenditure government will not be allowing. Clause 21B 40A, payments to non-residents. I, payments to residents 40A. Payments to non-residents has certain implications as of now. Many people think that the non-resident live in a country other than India, so the payment made to them is not taxable. That is not the case. Earlier, there was requirements of permanent establishment and all that in India for chargeability. Now, there are significant economic presence rules. Significant economic presence rules say if you target the customers in India through internet and your total users in India are 3 lakhs or more, and if you sell goods or services of rupees 2 crore or more in India via online mode, in that case, you have a significant economic presence in India and source-based taxation rule will apply. And to that extent of the turnover generated from these activities, the income is attributable to India and you have to pay tax in India. So any export commission, anything like that, you have to check whether SEP rules are hit or not. If SEP rules are hit, you have to mention the tax was deductible but not deducted if SSC does not do so. In the case of FTS, the rule is clear. Royalty, FTS are always taxable in India, whether the non-resident has a PE in India or not a PE in India. But in the case of FIS, fees for included services, the amount is not taxable due to Indo-US DTAA. Similar DTA are there for different countries. Wherever there is a FIS, fees for included services, the chargeability comes only if the knowledge is been made available. Otherwise, the amount is not chargeable to tax in India. So, if you are taking shelter of the DTA, mention that in the para 5 of form number 3CB very clearly. Clause 21C, this year there was a change in the partners remuneration competition limits. Book profit share lakh up to 6 lakhs and then above that. And the question is about applicability of those limits. These limits are applicable from assessment year 2025-26. So year under audit is covered by new limits. Now what you have written in your partnership deed is very becomes important. Some people have simply written whatever limits provided in section 40B is the limit for remuneration. In that case, no problem. If you have mentioned that how you will quantify the remuneration, they have to change the remuneration clause by 31st March of 2025. And if there is a fixed remuneration, then you have to change that fixed remuneration accordingly up to 31st March 2025. Then you can take benefit of new limits and accordingly allow the new limits for the purposes of computation of remuneration. क्लास 21 डी 10,000 से ऊपर जो भी अमाउंट है वो आपको मेंशन करना होता है. Clause 21D में in the clause 21 there is one important aspect that sometimes you purchase an asset in cash, suppose for a value of 20,000 or 25,000. So actual cost of that asset is pegged at 10,000 and rest amount is disallowed. So you have to take care of that amount in clause 18 also and here also. When payment is directly deposited in bank account of the payee, generally there is no violation, but it is not in the modes prescribed by section 48(3). But there is no violation, so you can make a suitable disclosure in your report that since there is no violation, pay is identifiable, we have not reported that amount here. Any provision made for payment of gratuity is not allowable, but provision for the gratuity become payable during the year is allowable, and payment of gratuity contribution to LIC maintained fund is also allowed. So we have to mention only the provision amount in case it is not related to the current year, otherwise, or it is related to some, say, you don't pay the LIC the amount, you make a provision for that, then it has to be mentioned here. If the payment has been made to LIC, group gratuity scheme, nothing to be mentioned here. Contingent liability debited to P&L account, you have to report here. The query is, the clause is somewhat to be wrongly drafted, but you have to be very careful. Clause 21H, section 14A. In big audits, company audits, you will find this clause applicable because companies have investment divisions. So after Finance Act 2022, two things have happened, that disallowance can exceed the exempt income, or there can be disallowance even if there is no exempt income earned. The logic is that if to earn exempt income, you have maintained certain staff, you have incurred certain expenditure. The income has not been generated, but in any case, you have incurred the money, and that money is not allowable from the taxable income. So you have to be careful. If there is any such scenario, you have to mention the amount here. Clause 22 has been discussed thoroughly in different seminars. So I am leaving it due to paucity of time also. First, we discuss important aspects of different clauses, and if there is remains something, we will discuss again. Clause 23, payment to specified person. We need not to judge about the allowability otherwise. We need to mention only the amount. Salary paid to wife, you have to mention the salary amount and relationship. Interest paid to wife, you have to mention the interest amount. Need not to be confused with the related party disclosures. 48(2) list of relatives has to be sacrosanctly followed and reported accordingly. Clause 25. Sometimes we find that there are unclaimed creditors in the books of the SSC. So if you find that the unclaimed creditor is running for long, or the SSC is not writing off, or SSC has written off, in many cases the problem is that SSC has written off and the amount is credited to the P&L account. Now if we report here, then CPC make two additions. One from the P&L already added to income by ourselves, and another from clause 25. Now this year, in the report itself, they made two columns, whether the amount has been credited to P&L account or not. If amount has been credited to P&L account, then I think there will be no double additions. So you can report the amount here without any issues. And if you still, this is the point. 43B. Now query is changed that amount was not allowable in the assessment of any previous year. So I take example of simple audit fees. Audit has been rendered in the month of September 2024. As per agreement, 45 days the payment was to be made. You have raised the invoice. The SSC has not made the payment till now. That is the case all over India. That amount was not allowable because of the operation of 43BH if you are holding a MSME certificate. So you have to mention that amount here in the amount not paid towards the liability. Similarly, if amount remain payable at the year end and it is not paid within the time allowed under section MSME Act, then this amount can be mentioned here also. Clause 27A requires the details of input tax credit, but the notified form doesn't carry this requirement. So if you don't want to report, you can simply make an observation in para 5 of Form 3CB that we have not reported this amount here. Now we come to the important clause, clause 31, that has increased reporting requirement this year very much. Earlier, suppose you borrow money from Ram Prakash Sharma, it's 75 lakh rupees, 10 lakh, 10 lakh, 10 lakh, 10 lakh, 10 lakh, and 5 lakh. In that case, you can report a consolidated entry of 75 lakhs and mode of acceptance. Now, this year, they are asking for every acceptance. So, every 10 lakhs you have to report. So, suppose 7 or 8 reporting will be there of one person. Particular of each loan accepted has to be reported, amount of each loan has to be reported. Similar is called 31B, similar is called 31C. So this has increased your job manifold. Last day there was a query that from bank, suppose some money is received or paid, loan repaid, then why don't we report it here? It is in the clause itself that these amounts need not to be reported, but banking company need not to be confused with the NBFC. Banking companies are those companies which are in the second schedule of the Reserve Bank of India, like all public sector banks, private sector banks. NBFCs, the any amount is to be reported here. Clause 31 BA, BC, BD, all are related to section 216 ST. So you have to mention that any amount received in excess or paid in excess of 2 lakh rupees by any of the modes other than the specified modes, or by any check which is not account pay check. So you have to mention this amount here. Now clause 31, specified sum is that some negotiation, some money is received, and specified advances, some money has been paid. But here, any money received for transfer of the real property is also a specified sum. So you have to be reporting that amount. Many times at the time registry cash is taken, that amount will come here. In the reporting under clause 31, the auditor is not required to see the violation of section 209 SSNT. This is the very frequent asked question in tax audit. So there is no violation, then why reporting is to be made? You have to report. You have to report the mode of payment, mode of repayment, mode of acceptance. You need not worry about the violation. That violation part will be taken care of by the assessing officer. So in the case of acceptance and repayment, you need not worry about the violation. You have to mention the amount here if that is above the limits. Suppose in a particular account last year outstanding was 18,000, it is a loan account, and you accept 2,000 rupees this year, then again you have to be report because total amount will go about 20,000. Maximum amount outstanding at the end of the at any time during the year has to be arrived at as a banking practices. The query was there last 2 days before that amount has been borrowed and repaid in the year itself. Then whether clause 31 will have to be reported? Yes, clause 31 will have to be reported. Advance against sale of properties and sale consideration both are to be reported in instruction to necessity with mode of acceptance. Similarly, interest accrued and credited is not to be reported, but if interest has to be repaid, then it has to be repaid by the mode specified. Acceptance by journal entries has to be reported. Repayment has to be reported, and mode of repayment or mode of acceptance journal entries now given in the drop-down menu itself. Suppose loan account is settled by issue of shares, then again you have to report it, and mode of prepayment is other than the mode specified. NBFC's transactions will have to be reported. In the case of builder, suppose there are 40 flats and he received advances from different persons, then you have to mention the amounts here. Share application money is not a deposit. Recent case, Calcutta High Court, CASP versus Vamshi Chemicals Limited, contrary to Balotra Engineering. You have to take your view according to the point. So 216 ST, the section is regarding receipts only, but here they are asking for both receipts and payments. So you have to take reporting as per the requirements. You have to take care of notification number 57 of 2017 while reporting under section 269 ST. Loan taken free of interest, we are not worried. We have to report it. Clause 32A asks you to the details of brought forward losses. So you have to check the return amount of loss and the 141 intimation, which invariably comes in any cases. And if there is any change, then CPC has adjusted the loss amount, then you have to report accordingly. And if there is scrutiny later on and an assessment order, there is a change, then you have to report accordingly. Clause 32B is regarding closely held companies. Loss incurred in year 1, then shareholders holding not less than 50% of shares shall be the same in the years followed by. If there is any change, then that amount of loss cannot be carried forward. That is the mandate. In the case of startup report on Section 80 IAC, means a company or LLP incorporated on after 1/4/2016 but up to 2025, turnover doesn't exceed 100 crore rupees and it holds a certificate of startup. In that case, relaxation is there that percentage shareholding need not to be checked for 10 years. So you have to ascertain the amount and report accordingly. Now we come to clause 34. In clause 34, you have to ascertain whether the payment was hit by any section and whether tax was deductible. If it was deductible, not deducted, you have to report here and you have to report in clause 21P also. If you are saying tax was deductible but not deducted, you have to compute the interest amount also and report in clause 34C. Reporting in clause 34A is very important. Suppose you have given salaries of rupees 1 crore rupees. So the payment made is 1 crore, out of which tax was deductible on suppose 50 lakhs. So you will say that on 50 lakh tax was deductible. So on which amount tax was deducted? Suppose 30 lakhs was the amount on which tax was deducted. You will give 30 lakhs tax was deducted and amount of tax deducted and amount not deducted will automatically be arrived at. Similarly is the situation for rent and all other issues. Clause 36A. Here you are made the assessing officer to ascertain whether any loan has to be treated as a deemed dividend. So you have to be very careful. Check 26 AS how the company treated the loan. If the company has treated as a deemed dividend, you are free. And money received for, so you have to scrutinize the bank accounts and all that of the person who has held a substantial interest and ask from him a list of companies in which he is having substantial interest. And for those companies, you check the entries whether any amount has been received or not. If received, whether it is a deemed dividend, you have to arrive at accordingly. Suppose the SSC has participated in a buyback proceedings after 1/10/2024, then the amount received is deemed as dividend under section 222. Clause 36B requires reporting of that amount. Clause 37, 41 41, you have to take care in case of a proprietorship firm, they maintain two sets of books, personal books. Suppose refund is issued in under any law and they take it to personal books, then you have to scrutinize personal books also to find out whether the SCC has done any such transaction. Clause 44, GST related details. Many persons are very much confused whether we need to report. Many persons adopted their own lame excuses. The SSC has not provided the data. We cannot report here. You cannot disclaim an opinion when data is ascertainable from the ledger, from the books of accounts. And you cannot say that SSC has not maintained the records because in that case GST account amount GST violations will be there. In the GST section 35 read with rule 56 clearly requires what is to be maintained. So you have to maintain inward and outward supply of goods or services, input tax credit availed, list of suppliers, registered, unregistered, composition suppliers that has to be maintained under GST law. So you are putting the SSC in a different scenario, difficult position. You cannot disclaim because the information is otherwise ascertainable. So you have to mention this amount here. Now we come to the end of the webinar. In the Form 3CB, there is no place for SA 700 basis for opinion. The ICI is instructed that you mention it in para 3 basis of opinion is given in the SA 70000. So you can mention that here also. In the case of a company formed after 1st of January, the first financial year will end on 31st 2026. Suppose in 3 months the turnover is liable for tax audit, then you will issue tax audit report in form number 3CB and not form number 3CA. Details of all registrations under GST has to be taken care of, and you can check at the GST portal with the PAN number also. Sometimes the fraud is played and the SSC's PAN number, there are GST numbers which the SSC is not aware. So in that case scenario, you mention the issue and ask the SSC to go for FIR with the police accordingly. In clause 14b, the query is related to deviation from method of valuation. Generally, books are maintained on exclusive basis. GST amount is separated. And people mention here that there is no violation. There is a violation. You are not maintaining books as per requirement of section 145A. So you have to mention that, and you have to mention that effect on profit and loss account is nil. The rest all we have already discussed. This is all about today's webinar on tax audit. Any queries? I am ready to take up.
Thank you, sir. Certain queries have been raised by the participant. One of them raised by Mr. Bharat Kumar from Delhi is, what is reporting under section 269 ST?
269 ST, they are asking you that if you have made payment of rupees more than 2 lakh rupees in violation of provisions of section 269 ST, not by account pay check or by check, but it is not an account pay check, not by any electronic clearing system of the bank, in respect of a single bill. Suppose there is a bill of rupees 5 lakh. You make payment 1 lakh every day. It is violation has to be reported. 1 lakh in cash. Similarly, single event. An event is like birthday party or some business meeting or something like that. So you have to report if there is a payment in cash in staggered manner. So this is what to be reported under section 269 ST 31BA, BB, BC, BD.
One more query has raised. Please repeat clause 21B, payments hit by section 40A.
Repeat what is the problem issues? Any issues that has to be discussed? Otherwise, payment to non-residents on which tax was deductible but not deducted has to be reported here, or deducted after deducted, not remitted to the government has to be reported here. So you have to ascertain whether tax was deductible or not deductible. As I told, PE and establishment in India all has gone now. SEP rules has taken off. So as per SEP rules, if the amount is chargeable to tax in India, or if there is a royalty or tax for technical services, then you have to check the DTAA. If DTA carries FTS clause, then it is chargeable to tax. If DTA carries FIS clause, fees for included services like Indo-US DTAA, then the amount is exempt, except where the services are made available to the Indian partners. That is the controversial issue. Rest is normal reporting.
Thank you so much, sir. I extend my heartfelt gratitude and thanks to CA Manoj Gupta sir for his insightful and detailed deliberation on the important clauses of Form 3CD. Your expert guidance has certainly added immense value and clarity to the participants, and we truly appreciate the time and effort you dedicated to this session. Thank you once again, sir, for enlightening us with your knowledge.
Thank you. Thank you.
It is very heartening and happy to see that more than 350 participants have joined this webinar and are currently uh, as participants in this webinar. Now let us move forward to the session 2 uh, by CA Saurabh Nagda sir on the topic recent changes in GSTR 9 and 9C to be filed for the financial year 24-25. CA Saurabh Nagda, he has an extensive experience in GST, central excise and service tax matters and specializes in GST advisory, compliance, audits, litigation and representation before authorities for various industries. He is a regular speaker at seminars and workshops organized by ICI, professional bodies and government departments. He has also contributed articles to reputed journals such as GST Law Times and actively represents industry before the finance ministry. Without taking much time, I would invite CA Saurabh Nagda to take over the session.
Thank you so much, ESG. And with this, I would also like to thank the CPD committee also for giving me this opportunity to present my views related to GSTR 9 and 9C. Because as we see, income tax filings are going on. But after that, we need to file these annual returns also, and for which the due date is last of December. I hope my screen would be visible, sir.
Yes, it is.
Yes, sir. So I'll start with my topic, which is recent changes in GSTR 9 and 9C, which is to be filed for the financial year 24 and 25. The thing is, we are like, what is GSTR 9? It is an annual return. And in this annual return, there are various, actually, if we see practically, there are various ways by which any person or any consultant is filing a GSTR 9. So they are taking GSTR 1 data also, based on that they are filing. Based on data in GSTR 3B also they are filing. And some might be filing based on books of accounts, whatever data is there as per books of accounts, so that they are taking and filing this return. So in my understanding, GSTR 9 is nothing but it is a summary of all these GST returns which we are filing. And there is a small tadka of this books of accounts also which we need to keep in our mind, because in case any additional liability is there, say, then we need to disclose that liability also in GSTR 9. So that is also given. So with this, a small gist which you can see on this slide is regarding GSTR 9 and 9C. For GSTR 9, again for this financial year 24-25, there is a limit of 2 crores. If your turnover is up to, aggregate turnover is up to 2 crore rupees, then it is not mandatory and you are exempt from filing GSTR 9. And for GSTR 9C, it's already mentioned in Rule 80 that if your turnover is more than 5 crores, then you need to file this self-certified statement. Now it is not no more CA certified after 1920. Also, the recent changes which have been done by notification 13/25, by which major changes were done. So they most of these were done to align the current format of GSTR-9 as per reportings done in GST returns for the financial year 24 and 25. As we have discussed, the due date is 31st of December 2025, and then I mentioned based on the turnover how much late fees would be applicable in case you don't file it within time. For late fees, also there is a very big change which was earlier clarified by a circular also, and we will be discussing all such changes in our upcoming session. So first of all, if we see why were such changes required. So if we see over the period, the return filing procedure has been drastically changing. If we see, earlier we were filing all our details, all our majorly our ITC details based on our books of accounts. Then there were many changes like you have to match it with 2A, then you have to again some amendments came, and then you have to match it with 2B, and then again a circular was there, circular 170, which came and changed the entire process of filing of GSTR 3B and even changed the format of 3B. So that too in the middle of the year. For 22-23 also it was very difficult. Even if we are coping up with that, and then we are coming on to filing of GSTR 9 and 9C for this 24-25 year. Now, if we see why such changes were required, the first and foremost reason was due to the reporting which we were doing in GSTR 3B. Negative ITC was creating in table 8D. That was one of the biggest concern of all the taxpayers, because whenever you are filing your GST annual return, and if any negative figure comes up in table 8D, table 8D is where you compare ITC as per 2B versus ITC as per 3B, then that negative ITC becomes a problem. So one was that reason. Other reasons were also that ITC of previous year, if we have availed such ITC in current year, so that was also causing some issues. Though, since I've said that there were various ways by which people were filing this GSTR 9, some people were sticking to the filing which they have done in GSTR 3B, and they were showing the same thing in table 6 of which shows ITC availed. So if they were putting their figures of previous year ITC in table 6, then also in table 8D negative figures were coming. Similarly, due to this circular 170, there was a special mechanism which was given, and by that mechanism, whatever ITC was reclaimed, that was coming twice in the gross ITC, which was forming part of table 4A. And due to that ITC reclaimed, also negative ITC was coming. Similarly, last one more thing was there, that as per during filing of annual return of 23-24, there was a press release just near to the date of filing, which said that in table 8C, you need to file all the details of ITC which was availed in next financial year, even if such details are not appearing in GSTR 2B of current year and are appearing in GSTR 2B of next year. So this was also very big reason. So those changes were necessary, those adjustments were necessary. Similarly, if someone was following the advisories and not reporting the ITC reclaimed or ITC which was availed and then notionally reversed, so if somebody was following the press release and not reporting such ITC in table 6, then in table 6J a difference was creating. We are going to discuss all these things in further table wise details also. And similarly, import of goods related ITC of last year was also causing an issue, and some other adjustments and clarifications were there which were necessary. So, majorly, if we see, all these things have been taken care of during this amendment. issues can still be there. We have some examples for that also. But if we see majorly, many of the things have been covered by these amendments. A small instructions, very important instructions which we need to see are over here, out of which it is very clear that you need to file your 1 and 3B, then only you can file your 9. That is repeatedly told now also. And even stated in the FAQs also, which have been released on 16th of October on the GST portal. Very important, this instruction 2A, which was missed by many of the taxpayers, was it clearly mentions that in table 4, 5, 6, and 7, any taxpayer filing such annual return needs to report figures of that financial year only. So by this, it was clear that if any ITC of last year was availed in the current year, that was not to be reported in table in GSTR-9 of current year. So same applies for next year also. Like if some ITC is there of current year which are availed in next year, then while filing GSTR-9 of next year, I don't need to report such ITC. So this is very clear that annual return is of for reporting figures of financial year, current financial year only. And now they have made an amendment that unless if we say that you need to report a particular figure of last year in this table, then only you need to report such figure of last year. Then other instructions are also very good instructions which we need to bear in our mind while filing such annual return, which is if there was any additional liability which was not reported in GST returns, so that also can be reported here. But you cannot claim ITC. So a restriction is there on ITC, but not on the tax liability which we need to report. Also, while filing 9, if any such additional liability has been reported by you, then same can be paid by DRC 03. And how to pay such amount by DRC 03? You need to select annual return as a reason, and then such amount can be paid by cash or ITC as the case may be. So earlier, before this amendment, in the GST instructions, it was written that you need to pay such liability by electronic cash ledger only, though there was no such restriction by law. But in rules, directly this it was written, to which we didn't agree legally. But now that correction has been made, because naturally whatever liability you have can be paid by both ITC and cash balance. So this correction also has been done in these returns, and these are basically a summary of some important returns. If we see in table 4 and 5, in table 4 we report taxable supplies on which we are paying taxes. There is some outward tax going on from my side. So those turnover related adjustment, credit note, debit note, etc., are reported in such table 4. And in table 5, those supplies are reported where there is no outflow of tax liability. So this is the gist. And this is pretty much settled. Since it is settled, therefore, no such changes were done for these two tables. Next, coming on to the next part, which is just a second. I'll just yes. So coming on to the next part, which is important and which is related to that circular which we have discussed briefly earlier, that there was a circular 170 which told us that how we need to file our GST returns by reporting ITC in a particular fashion. And that particular pattern and fashion was that you need to file your ITC based on ITC appearing in GSTR 2B. So say in January, if ITC of 10,000 rupees was auto-populated, then you need to avail this entire amount of ITC. Out of this ITC, if any amount is, say, temporary reversal, because temporary reversal, they have explained that if you have not received the goods or invoices, but such ITC is appearing in 2B, and which you have received in your factory and booked in your books in the next month, then such ITC becomes a temporary reversal ITC. So, since it is appearing in 2B, you need to report in 4A5, which we have mentioned here, and you need to again reverse this 3,000 rupees and as a temporary reversal in 4B2. Then your net ITC will match. Earlier we were directly claiming this 7,000 rupees itself. So there was this change. Due to this change, again some issues were coming, which we are going to discuss. First such issue was whenever this ITC was reclaimed in the next month or subsequent months. So say in March we have claimed this ITC of 3,000 rupees because legally though it is eligible. But what is happening over here is in table 4F5, if you see the total of January and March, it will come 13,000 rupees, while it is appearing in GSTR to be as 10,000 only. So this was also one of the reason of mismatch in table 8. So this is very important one, that this circular we also need to keep in our mind. Many of the tax practitioners, fellow members and taxpayers, they were all following this procedure itself, and we are going to discuss further in detail, like for this presentation how we need to file our GSTR-9C for this current year. If we see the changes in table 6 of GSTR-9, table 6A was earlier also auto-populated, which I basically say is the gross ITC which we have availed in GSTR-3B. So that comes from total of 5 line items which we mentioned: import of goods, import of services, RCM ITC, ISD input service distributor related ITC, and all other ITC. So that total comes auto-populated over here. This table 6A1, this has been inserted from this financial year, which was earlier missing. So earlier what used to happen was, if we recollect the earlier instruction which we have discussed, instruction number 2A, then it was pretty much clear that ITC of current year only needs to be reported in this table 6, where we discuss all the ITC, we present all the ITC. So if such ITC of only current year is presented, then in last table 6J, there would be some difference, because auto-populated number would be higher, say 100 rupees, and current year ITC would be only 80 rupees. 20 rupees ITC is of last year. So such difference used to come in table 6J, and we have seen such notices and everything coming from 22-23 onwards when we have adopted this presentation. So this was very big issue. So now a specific column, this table 6A1 has been inserted, where you need to put all such ITC of last financial year. And such ITC would be reduced from the gross ITC. And then again, this A2 column has been inserted, which says net ITC of the financial year, which means of the current financial year, 24-25. So that ITC would come over here. So whatever ITC you have taken in 3B, that bifurcation has been given now. That you have removed ITC of last year, now only current year's ITC is there. And that current year's ITC you present in table 6B to 6H. So ideally now difference in table 6J should be 0. So last column 6J, the difference would be now, it should ideally be 0. So that is what is written in the instructions part also. If we see some of the relaxations which were earlier also applicable for all the years from 17-18 to 23-24, it has been extended to this year also, 24-25, that you need to mandatorily report capital goods as a separate line item, and inputs and inputs services related whatever ITC is there, that you can directly report in inputs only. So this is also a relaxation optional item which has been given to us. Again, there were various confusions, like in table 6H, it mentions amount of ITC reclaimed under the provisions of the Act. So what is such ITC which needs to be mentioned over here? So this was a very big debatable topic also, because there were various different views of all such taxpayers and consultants also. So now it has been clarified that two types of ITC is there, which is generally mentioned in this ITC reclaimed figure in table 6H, which is ITC which has been temporarily reverts, like we have seen that 3,000 rupees in our example. So that amount, whenever we are availing, so we need to report it over here. I am going to discuss it via some examples also in the further slides. And also, if we see conceptually, ITC reclaimed was earlier only related to Rule 37 and 37A. Both these rules are also very important. Rule 37 deals with whenever you have not made payment to your supplier within 180 days, in case of normal all other ITC, such transactions. So there you need to reverse your ITC, and then such ITC can be reclaimed without any such time bar whenever you are making payment to your supplier. Also, Rule 37A was inserted in 22-23 somewhere, where it was mentioned that if your supplier has not made payment in their GSTR 3B, they have not filed their GSTR 3B, then you need to reverse such ITC. Such ITC could be again reclaimed when 3B was filed by the supplier, but this restriction is again there. So you can avail it once when it is appearing in 3B, but again you need to reverse it. And after reversing, whenever such conditions are fulfilled, you can reclaim it. So those reclaimed ITC as per rule 37-37A also comes in table 6H. So this is the brief of very important table 6. Now a small clarification which was made was table 6M, because we have also seen taxpayers and consultants using various methods of presenting last year's ITC, because they have removed last year's ITC from the above table so that proper reconciliation can be done in this table 8 with GSTR 28 to be ITC. So many practitioners were doing, they were adding last year's ITC in this table M. Even many practitioners, what they were doing in table 6B to 6H, they were presenting only the net ITC which was availed by them. As per circular 170, you need to claim ITC then reverse if it is appearing in year 2B. So that temporary reversal part was also there. So many of them, what they were doing is such reversals, availed ITC and then reversed ITC, which was a temporary ITC, those were also presented in table 6M. So that issue was also coming. So now it has been clarified that 6M is not to be used for any other thing, because earlier it was mentioned that any ITC other than 6B to 6L can be put over here, but now it is very straightforward. This table is straightforward. It says ITC as per ITC 1, which has been availed, which actually directly goes to your electronic credit ledger through ITC 01, 02 and 02A, which are not filed and not related to filing of GSTR 3B and Tran 1 forms. So those ITC only you need to give here in table 6M. So this is very clear now. Now moving on to table 7, what are the changes done over here? So 7A to 7G, if you see, these are very particular reversals which you need to mention, like reversal as per rule 37 which you have discussed, 37A, similarly 38, 39, 42, 43, all such rules based reversals are over here. Then 17.5 based reversals are also there, because if you are following circular 170, entire ITC you are reporting in table 4A, and then such ITC is being reversed as permanent reversal in table 4B1. So that ITC you need to report over here. So this is very such specific cases of ITC reversals which we have discussed from A to G. So earlier it was an optional facility given that you could report all such ITC in 7H itself. You didn't know, there is no need to bifurcate all such reversals. But now it has become mandatory to report all such reversals in their places only. Again, Rule 37A based reversals were earlier reported in table 7H. Now as special place A1, this new column has been inserted and now we need to report it over here. And now what about 7H? 7H is for other reversals. So there if you file your GST returns, you can see 1, 2, 3, 4 and many such parts will come for 7H. You can put your remarks in respect of all such reversals. If there are 5 type of other reversals, you can report it over there. So majorly, whatever reversals other than above are there, For example, like if by clerical error I have taken any ITC, excess ITC, I have reversed in my next month, so that reversal can be reported in table 7H. And if any ITC is there which has been reversed from credit ledger in ITC 03, then also that can be reversed over here. Now, very important table, table 8 of GSTR-9. Here, from the beginning, the basic crux and basic thing which was required and which was done in this table was whatever ITC is there which you have availed in 3B, that was being compared with table with ITC as per GSTR 2A and now 3B, 2B, sorry. So 2A versus 3B or 2B versus 3B, that reconciliation is being done over here. So first lacuna which we were facing over here was that in table 8A, if we see, for the financial year 23-24, whoever has filed this annual return, they would have noticed that in table 8A, it was mentioned that only ITC appearing in GSTR 2B of the financial year 23-24, that used to appear over here. If any invoices were there of 23-24 which were appearing in GSTR 2B of 24-25, that ITC never used to appear in table 8A. On the contrary, there was a press release which said, then in table 8C, you need to report entire such ITC of financial year 23-24, which was appearing in GSTR 2B, either of 23-24 or 24-25. So again, what happened? Disparity came that in table 8A, such ITC was missing, but it was reported in 8C. So naturally, in table 8D, differences came. So that part has also been taken care of now, though there is no such specific amendment done over here. But in the FAQ, 16th October 2025, whatever FAQs have been uploaded, there it has been specifically mentioned that if such ITC is appearing in GSTR 2B of the next year, that is for the financial year 24-25, if any ITC of invoices or documents of 24-25 is appearing in GSTR 2B of 25-26, then such ITC will also come over here. And we have checked few examples also for this, and they are rightly saying this part. So you can download your Excel file of GSTR 2B and check this part also. And interestingly, one more issue which used to come earlier was that whatever ITC was appearing in table 8A over here, so that we were not able to match with the Excel file which was downloadable from the GST portal. So for that also, what can be the reason for difference? That part has also been explained in the recent FAQs. So we'll discuss that part also in our slides later on. Coming to the next change which has been done is in table 8B earlier, here the total of 6B and 6H used to come. So this is very important. Whenever ITC as per 6H, that is reclaimed ITC used to come over here, so it used to cause a repetition, because whenever this IT is coming again, then here some difference will come. If such ITC was not reported in table 6H and say some people were reporting such ITC in table 6M, then also what used to happen was in table 6J, which we have discussed earlier, where ITC, total auto-populated ITC was compared with the breakup of ITC which we have given. So that difference used to come. So somewhere it was a need, it was a very much indeed a need that 6H should be removed from 8B. So that has been done now. Now, only ITC as per 6B will auto appear over here, which we have already filed in table 6B. And reclaimed, any of the reclaimed ITC will not come over here, because naturally, if it is being reclaimed, it is already appearing in 2B of some earlier period, maybe earlier period or this period also. So that part should not come over here. So it has been removed. We have discussed the differences which were coming in 8D, and we are going to discuss more further also. Moving on to the next change, which was again very much required, was in case of this table 8A to 8D, we are seeing that department, this CBIC has given this form also. Notification was issued, everything was done, and here only all other ITC was being compared. In table 8C, whatever all other ITC which we used to report in table 4A5 of GSTR-3, that only used to come over here. Now the import of goods related ITC, that adjustment was missing, because earlier G column 8G, it used to say whatever ITC you have, whatever IGST you have paid on import of goods, you need to report it over here in 8G, and then ITC which we have filed in table 6E, which where we report import of goods, that ITC used to auto populate over here. So if this was a case that we have paid 10,000 rupees as IGST and we have availed only 8,000 rupees in current year, then 2,000 rupees difference would come over here in table 8I. So that difference was very critical, because department used to say that this is such ITC which you have foregone. But in actuality, what was the case? Such ITC was actually availed in the next financial year. So this ITC of on import of goods, which was availed in next financial year, but relates to the current year, bill of entry filed in current year. So this we need to report in tables 8H1. So this is also very important. Earlier there was for while we were filing this annual return of 1718. So during this 1920, some various press releases were issued. So at that time, one press release was issued which used to say that ITC on import of goods, whether you have availed such ITC in current year or next year, you need to report it at table 6E. So that also issue was there, which used to make differences in table 6J. So this is a bit technical, but if you will see, this has actually in Crux, if we see, this has helped a lot. And we can report our import of goods related ITC, which we have availed in next financial year over here. Now taking two tables, basically table 9 and 14, what they were doing were, in whatever tax liability we have reported in table 4 and 5, so that tax payable used to come over here. Then it was being compared with whatever tax we have paid either by using cash or by ITC. Then it was okay. Then it was completed. Such table was completed. But it was a need that some comparison should be done. That first of all, by cash and ITC, how much tax we have paid, and then a comparison between payable versus paid should have been done. So that has been inserted now. So earlier we used to make a working for this separately, but now the system will automatically calculate this part. And similarly for table 14, where if any such tax liability was paid or adjusted in next financial year, so that part used to be reported in table 14, and there also a similar change has been done. Now coming on to very important, this is basically table 10 to 13 which we have covered over here. So earlier we have drawn a comparison like for 23-24 how it was, and for 24-25 onwards how it will come. So in Crux, if we see, these are some just cosmetic changes over here. Reporting part was different for various companies, but what should have been done, we'll discuss that part also. In table 10, earlier also and now also, whatever liabilities, tax liabilities are there of you, which you have, which are pertaining to the current year, but you have paid in the next financial year, that part used to come over here. So this is very important. If any liability of 24-25 is there, which you have paid in 25-26, then it needs to be reported over here in table 10. Similarly, if any excess tax was paid in say current year 24-25, and such liability needs to be adjusted in the next financial year, then if you have adjusted such liability, then it used to be reported in table 11. So now specifically it has been mentioned by either you have raised a credit note which you have reported a credit note of current year and next year and then reduce such liability, or through amendments you have done. So that part has been specifically mentioned: invoices, debit note, and credit note. But in essence, the same thing needs to be reported. There is no such change. Similarly, for table 12 and 13, it is again a cosmetical this correction which has been done. Earlier, it was mentioned reversal of ITC availed during previous financial year in table 12. Similarly, in 13, it was written ITC availed for the previous financial year. So, by plainly reading this, one would think that for 24-25, if we are filing such return, then we need to report ITC of last year into this in these tables 12 and 13. So this was coming out of the plain reading of such tables. However, it is to be noted that instructions were very clear. In table 12, we needed to report that ITC of 24-25 that we have reversed in 25-26. So that part was already mentioned in the instructions. So that correction was required in table 12 since 17-18 itself, and that has been done now. Now it has been specifically mentioned that ITC of financial year reverse in the next financial year. So that you need to report over. That is ITC of 24-25, which has been reversed in next year 25-26. Similarly, for ITC availed also, you need to report in table 13 that ITC which has been availed in the next financial year. That is for 24-25, what you have availed in 25-26. Again, some tables were there which were optional since 17-18. So those optional tables have been given now also for 24-25. That is table 15, where we show refunds and demand details, and table 16. So these are still optional. And if we see table 17 and 18, in table 17 we report outward HSN summary. In table 18 we report inward HSN summary. So for outward HSN summary, there were earlier clarifications which I have mentioned over here also. If your turnover is more than 5 CR, 5 crores aggregate turnover, then you need to report 6-digit HSN. If it is less than or equal to 5 CR, then 4-digit HSN code needs to be reported only for B2B supplies. Then some clarifications are there which are recurring and coming for 24-25 also, that UPUC needs to be reported only for supply of goods. Very important. It's not needed for services. Such changes have been done in 3B also and now done over here also. And quantity is always to be reported on net basis. If you have raised debit note and given some quantity, raised credit note and reduced some quantity, then such net quantity only needs to be reported. One practical issue which we are facing that will come now also, that while filing this table, it is very important to take care of this, that it might happen that when you are multiplying the GST rate with taxable value, so multiple decimal points would come. So you are going to report the tax figures based on that. But if the system does not match, or the system does not is not able to correct or match such taxable value into GST rate with the total of the tax amount, if any decimal issue of even 0.01 rupees is there, then also system does not accept this HSN summary. So minute changes you need to done in this either tax amount or taxable value. So this is still there. And in table 18, if you see HSN of inward supplies, so this has also become optional for 24-25. Moving on to 9C, where we are basically doing reconciliation of turnover, tax, and ITC. So there, if we are seeing table wise, in table 5 where we are doing the turnover reconciliation, so there are various adjustments which have been mentioned from 5B to 5N. So all these are optional and you can directly report such adjustments in table 5O. But again, if we see at the time of assessment, it becomes a very different case. If you're not showing them separately and reporting the entire figure in table 5O, it will again become a issue and pain in while assessments. So what we otherwise guide is, even if you are reporting in 5.0, you should have a back working for it, which should be there always, so that assessments can be done easily. And also, otherwise, if you are having such figures 5 and 5B to 5N, since you are preparing that working, in our opinion, should be reported separately itself. Similarly, in table 7, there was a requirement that if I'm a supplier who is supplying through e-commerce operator, so here the e-commerce operator is liable to pay tax. I'm not liable to pay tax. But such such a turnover is also there for me, on which I'm not paying such taxes, but e-commerce operator is paying. So for that also in table 7, this specific table has been inserted for e-commerce. Similar changes have been done in table 9, where we are comparing this tax liability on rate basis. And a small, again, a cosmetic error was there in table 9Q, second last line item. Earlier, total amount paid as declared in annual return was mentioned over here. And the figures used to come off payable, and there was this mismatch, which has been corrected now in table 9. In table 12, where we are doing ITC reconciliation as per books versus GSTR-9, there is no such change, no optional or any such thing is there. Though in table 14, where we are required to give expenses via is ITC detail, so there again this option has been continued. It has not been deleted yet. God knows we have not filed such a table from 17-18 onwards, and right now it is optional. Very important, again, this as we were discussing earlier also during the first slide of late fees. For 9C also a separate table has been there, incorporated, table 70 for late fees. In GSTR 9, table 19 is already there, where we are reporting this late fees. But here in 9C, if we are reporting it late, then also late fees is payable. So how it would be calculated is a main thing which we need to understand. So assuming if I have filed GSTR 9 within time, but 9C is filed after 7 days of delay, then the system will compute late fees only for 9C for these 7 days. Taking another example, if I have not filed both of them within the due date, and I have filed GSTR 9 after 5 days and 9C after 7 days. So differential 2 days are there. So what system will do is, while filing GSTR 9, it will capture late fees of 5 days in table 19. And while filing GSTR 9C, system will again check whether you are filing it on the same date or no. If you are not filing it in the same day, as in our case, we are filing with 2 days delay, system will calculate late fees for such 2 days over here in table 17 of GSTR 9C. Now, though I'll share the slides and this FAQ part also with the coordinators and moderators, so that it can be sent to the members if needed. But we are touching upon some of the important FAQs, and I hope these FAQs will definitely clear some of the aspects, some of the queries which we would have. So first is, what is table 8A of GSTR 9 and how it will be auto-populated. So this is very important. As we have discussed, that in filing of GSTR 9 of 23-24, earlier only ITC which was appearing in GSTR 2B of 23-24 that used to appear. Even such ITC was of 22-23 which was appearing in GSTR 2B of 23-24 that also used to appear. If such ITC of 23-24 was appearing in next year's GSTR 2B, that didn't appear in table 8A. So that correction has been done now back in the backend, and for this there is no such instruction given, but now this FAQ is there which is supporting, and plus I have seen some practical examples also. So here it is mentioned that in table 8A for the 24-25 GSTR 9, ITC only for which dates are mentioned as 24-25 that will appear. If such ITC is appearing in GSTR 2B of 25-26, that also will automatically come over here in table 8A. And if any ITC of 23-24 is appearing in current year's GSTR 2B, so that would be removed. So this is very important over here, because it's very clear now that GSTR 9 needs to be filed for only this with figures only for the current financial year. So that has been clarified in this question number 3. Yes, this is also again important that is there any impact of IMS while filing this GSTR-9? So actually there is no such impact because whatever IMS facility you have used, you have availed, use such facility to generate GSTR-2B or not, the system will capture the data from the GSTR-2B only. No such action should be taken from IMS. If any excess ITC is there, that won't appear over here. So this GSTR-2B is very important. Based on this only table 8A will be formed. Again, whatever amendments are there, we are normally doing it through GSTR-1. But this question number 5 covers that part, that if you are making any amendment through GSTR-1A, so this functionality was also included and given to the taxpayers. So any amendment done through 1A will also be appearing in table 4 and 5 of GSTR-9. This we have discussed though in detail during this discussion on table 6, that what is table 6A1 and how amount needs to be reported over here. But here I would again like to highlight one important thing which has been given, that they mentioned specifically that if you are mentioning figures of 23-24 while filing annual return of current year in table 6A1, then 6J will be 0. That there would be no difference of last year's ITC in table 6J. So this is a very good thing that government has done for us. And yeah, any such ITC of last year which has been reclaimed in the current year, and it is reclaimed due to the reason of rule 37 and 37A, so that will not be reported in table 6A of GSTR-9. So this is also an important clarification. You need to report it in table 6H of the current year. It won't be reported in table 6A1. Now there are some examples which have been given. So here it is mentioned that if any ITC is pertaining to current year which has been availed, then temporarily reversed and reclaimed in the current year itself, then how it will be presented in GSTR-9. So it is mentioned that claimed ITC, since it was first claimed, it needs to be reported in table 6B as it is pertaining to the current year only. We are assuming this part. And then since it was reversed, it needs to be reported in table 7 because it is very clearly mentioned it is of the current year only. So it needs to be reported in table 7. And from 7A to 7H, wherever we need to present over there appropriately. And then since it was claimed and reclaimed in the current year only, it needs to be reported in 6H of GSTR-9 of current year. So even if we see that such ITC is coming in 6B and 6H, since the amendment have been done in table 8, system will automatically compare ITC as per GSTR-2B with ITC which we have availed in table 6B. So the proper reconciliation would be there now, and 6H won't form part of table 8. So these are some examples which have been given. Both examples have been given. What if such reversal has been, such reclaim amount has been due to the reason of rule 37? And what if such reclaimed amount is due to rule this circular 170, where this change in presentation was there? Again, next example is there where it is coming that there is a ITC of financial year 23-24 which was claimed and reversed in the last year itself, and now it has been reclaimed. So now if it is being reclaimed, then again we need to make two parts of it. If such ITC is of rule 37 and 37A, then it directly needs to be reported in table 6H as reclaimed ITC, which was actually the nature of reporting in table 6H. And if such ITC is being reclaimed in 24-25 and it is due to the reason of temporary reversal now being reclaimed. Hello, hope I am audible.
Yes,
Yes,
you
sir.
are audible.
Yeah, sorry. Yeah, as we were on this point that such ITC was claimed and reversed in last year, but now reclaimed. So, if the reason of reclaim was of Rule 3737A, then it needs to be reported directly in 6H of current year, which is reclaimed ITC. And if such ITC is being reclaimed in 24-25 due to the reason of that circular, that now we are eligible and the temporary reversal we are now reclaiming, that it needs to be reported in table 6A1 as ITC of last year. So this is a difference which actually we need to know, and whenever we are checking the workings, we need to specifically ask for whether such reclaimed ITC is due to which reason, 3737A or that circular. And based on that, these examples are over here which we can see. Similarly, if such ITC is there of 24-25 which has been claimed and reversed in the current year but reclaimed in the next financial year. So again, as we have seen, it would be reported in 6B and 7H, so there is no issue in that. But as to reporting in next year, we need to see if it was for reason other than Rule 3737A normally due to this circular, and it was reclaimed in next financial year, then it needs to be reported in table 13 of the current year. Earlier, we used to report in table 8C also, but now it's appropriately and correctly mentioned that if you are again reporting it in table 8, then it will cause a difference, because again you are saying that such ITC was already claimed, it was forming part of 6B, and you are taking making it part of 8C, then 2B versus 3B mismatch would be there. So it is mentioned you don't need to report in table 8, but you can report it in table 13, which is basically only a reporting part which is mentioned that we need to report ITC of 24-25 which we have availed in 25-26 in this table 13. So that reclaimed ITC of availed in next year would be reported in table 13 only and not in table 8C. Also, it is mentioned that while filing GSTR-9 of next year, this ITC will be reported in table 6A1. So this is also we have discussed for 23-24. Similar example is there. And if such ITC is for reason due to Rule 37 and 37A, then such ITC will not form part of 6A1 of the next financial year's report, but it will directly form part of 6H as reclaimed ITC. Also, it is clarified that such Rule 37-37A related ITC need not be reported in table 13 of the current GSTR-9. So this is the basic difference. If we can understand this part, so the reporting part becomes more clear and understandable. So based on this, only some examples have been mentioned, which I'll share with you. But the crux of it we have discussed. 6M also we have discussed. So definitely it's mentioned that since it was already mentioned that we should report all other ITC which is not reported earlier in 6M. So that was used for many people by different reasons. But now it is clarified that ITC 010202A related ITC only needs to be reported in 6M. Then 6A, it can be downloaded from GST portal as we have seen. Very important part which I was referring to earlier was that we were facing various issues in the ITC which was auto-populated in table 8A versus what was appearing in the Excel file when we were downloading such files. So the broad reasons which were there, those reasons have been explained over here. There can be some other reasons also, like uh, if we discuss all these first, if RCM inward supplies is there, so that ITC is also always coming in the Excel sheet whenever you are downloading table 8A figures. But that part is not forming part of online table 8A. So this is the difference. Also, if there was any amendment from where I was, such ITC was earlier reported as normal charge, that is a normal transaction, then it was reverted by say a GTA to reverse charge. Then both such line items would be there. B2B, B2BA. Both will appear in 8A Excel file, but not in the online file. So this is also clarified. So if you are finding some differences in the figures, these are probable reasons. Similar reasons are there are. It is clarified that if the place of supply is in, say, the Rajasthan, and the recipient is in Gujarat, so he cannot take such ITC. So if amendment related to such supplies was there, that earlier the supplier had raised IGST, but now he has amended and reported CGST and SGST. So both B2B and B2BA will be there in Excel file, but not in the online file. So this is also important. Then if any amendment has been done, so those amendments have also been considered over here. So in Excel file, they would be there, but in online file, they won't be there if the amount has been shifted. So these are some of the cases which you can refer to. And yes, this we have discussed. Any such changes in 1A IFF, all such changes will form part of table 8A. So this has been explained over here in 3 examples. So this is also a good example one can refer to. Then table 8C has been explained, and very importantly, it has been mentioned that whatever ITC which was missed in current year and it has been availed in next year, that only needs to be reported in 8C. The reclaimed ITC need not be reported over there. And so this is again the same part that reclaimed ITC need not be reported in 8C. So all those examples are very important and have been covered in this FAQ. Then coming to the another important example, if we see, yes, so this was again we have discussed that 6H has been delinked from table 8B, and the reason they have mentioned over here, which we have already discussed, that it was leading to negative ITC in table 8D, since ITC was coming twice. And it has also been mentioned that if in 3B, while if there is any such negative liability, then whether such negative liability will appear in table 9 of GSTR-9, which shows tax payable versus tax paid. So it has been mentioned that such amount, negative amount won't come, that amount will become zero and then come. So whatever separate formalities you need to do, like claiming refund or adjusting in the next financial year, that you need to report over there in GSTR-9 appropriately. Yes, this is an important clarification for HSN. Whatever filing you have done in all the 12 months GSTR-1, so that part will come auto-populated in table this 12, from table 12 of GSTR-1 into table 17. So there will be an Excel file also which you can download and check. You can check the HSN summary first and then use it to file the return. This part we have seen, and it has been rightly forming part of FAQ also, that how the late fees would be calculated in GSTR 9C in this new table. Yes, this we have seen, we have discussed that reclaimed ITC due to rule 37 and 37A needs to be reported in table 6H. And I guess that's it from my side. I'll thank you, and I'm open for the questions if any.
Thank you, Saurabh sir. It is a great matter of happiness.
1 to 20,
Satish Kumar Gupta sir has joined us. I would briefly introduce him. CA Satish Kumar Gupta is presently serving as the chairman of Continuing Professional Education Committee of the Institute of Chartered Accountants of India. In addition to his role, he is also the chairman of UDIN Directorate and vice chairman of the committee for members in practice for the current term. He previously served as a council member of ICAI from 2019 to 2022. He is a renowned speaker and author specializing in income tax assessments, searches, survey, and professional development topics like goal setting and career planning. I would like to invite CA Satish Kumar Gupta sir for his address.
Thank you, brother. Thanks a lot. And thank you each and everyone who has attended this webinar, the speakers of the day. And today I could not join at 4 because I was busy in some disciplinary committee meeting. So I'm really sorry, but I think both the speakers have done some value addition to our professional career. And at this juncture of time when tax audit is there, although 3 days are only there, but I think there may be some help with the deliberations of the speakers. And my brother has taken on the GST. So this is something very good, and I feel that CP committee should continue with all these type of webinars. And we are committed to provide quality and availability of the program this year. And we are working on that as much as this is around 60th webinar this year. And we are committed to hold 100 webinars. And what a love and affection which we are getting from the members throughout the country is really enormous. And we are thankful to all the members. I wanted to speak several things, but I think this is something 5:51 and questions. Yes, you have some questions to ask with the Saurabh?
Not many, sir.
Three, four questions you have?
Just one.
One, okay. So just I would like to brief that we are working a lot this year at ICI. We are working on the aggregation. We are working on several other things like CP committee, PDC, yeah, UDIN. In UDIN, we have done three steps. One, I would like to just explain here that our members are facing some issues in filling up that UDIN requirement on the auditor's opinion. I would simply like to say, my dear friend, that it is applicable on all the tax audits. First, we should understand, because in tax audit, we are not simply doing certification of the 3CD, we are also making comment on the financial statements. So, on 3CD, that particular requirement of auditor's opinion is applicable. So, we will have to tick the yes and we will have to move forward. Thereafter, we will have to see only one thing, whether as an auditor you have changed your opinion in regards to financial statement. If you have changed your opinion in regards to financial statement and filled clause 3, subclause A of form number 3CB, clause 3, subclause A of form number 3CB, then you have to go ahead. Otherwise, your report majorly will be clean. So, accordingly, you will have to move that. That is very simple. And the very purpose to implement this particular initiation was that the people uh, at the government level were asking questions on our quality of audit. So we were interested that we should have the figures for research purposes, so we can share at the time of such demand that how many reports our members have qualified or have given the disclaimer, or there are adverse opinions, or the EOM or OM. So there is no other purposes. Nobody, even verifier of the UDIN certificate can see these figures. So it is only the auditor who has filled, and the institute just for the research purposes, just for the data purposes. So don't worry at all. Go ahead. And it is what I am told, that it is only consuming 1 minute or 2 minutes, and we all will understand in the times to come that what benefit this particular initiation has given to the profession at large. So I would I would request you that kindly give your positive feedback, give your suggestions, and we always welcome your suggestions and feedback in any respect. Apart from this, we at CMP committee members in practice, we are working a lot to provide several initiatives for our members. As of now, we are working on that. How can we provide some technological step like Google, Adobe, some Meta AI? So we are working with them that how can they provide their tools to our members on subsidized rates, so our members can feel better and they may feel the happiness on their face. We are also working to bring some new credit card of 2 3 private banks. We are working on, we have already um, launched the unsecured loan from SDFC loan at the rate of 10.6% in reducing interest without any collateral security, and that too from the SDFC bank. So there is no compromise that you cannot get the audit of public sector bank if you get the loan from their SDFC bank. You know, they are not providing us as of now branch audits. So it may be a value addition for all of us. So if you are in need of money, and that is up to 50 lakhs, and amount is 50 lakhs, and so many members have contacted the SDFC. I think around 20 crores have been disbursed in last 15 20 days. So this is going good. So we need your suggestions, we need your feedback, positive feedback, so we can move ahead. And bear with us. I can understand that some problems may be faced by the members about the UDIN, and whenever we will launch the real-time physical CP credit system, when the credit will be allowed only on physical attendance basis, some members may feel some pains. But friends, believe me, these are the need of the hour, because all the entire world is looking after a chartered accountant, and chartered accountant is the person to whom the word relies, the word trust. And to maintain their trust, we are working a lot, and we need your wholehearted support. So thank you very much, my dear friends, for your love and affection to the CP committee and to all of us. And thank you very much all the speakers of the day who spare time in this very hard time. I can understand on 30th, on 29th of this month, when all are busy in tax audits and the company audits and return filing, it is really tough for the speaker to spare time. So really, thanks from my deepest core of my heart, both the speakers for sparing the time, and to moderator who spared 2 hours to this particular session. So really wonderful. Thanks a lot. Thank you, my dear friends who attended in such a large number this webinar. Over to a lot.
Thank you so much, sir, for your wonderful address to the participants, enlightening us about the various initiatives taken by ICI and CPE committee along with the UDIN Directorate. Now we have one question for CA Saurabh, sir. Can you please question is from Vikas Reddy Desnani from Hyderabad. Can you please help me with where I will get the FAQ copy?
So basically, it is on GST portal itself. Once you go to the gst.gov.in portal, and there in the news and updates, the second line item would be of that FAQ. In any case, I would be sharing the same with the CPE committee also. So you can take it from them also, or otherwise directly you can access it from there.
Thank you, Saurabh sir. It was a wonderful deliberation. Heartfelt thanks.
Yeah.
Uh,
Yeah, just a small thing. Sorry, Yash.
yes.
I've presented the screen also on the portal that we are able to download it from here. Whenever we are clicking on this FAQ, and then by clicking over here, we can download the FAQ copy.
Uh,
Thank
Definitely.
you. Yeah.
Thank you, CA Saurabh sir, for your informative and well-structured session on the recent changes in GSTR-9 and 9C for financial year 24-25. Your insights have truly helped the participants gain a clearer understanding of the latest updates and compliance requirements. We are grateful for your time and contribution for today's webinar. Thank you. Thank you so much.
Thank you so much.
Yeah. Haji.